Good morning, everyone. Welcome to the Euro Trade. I'm your host, Marcus Stalker D. And we're going to see what the metals are going to do today. If we're meeting for the first time, I'm a commodities trader, so you will see me analyzing precious metals, base metals, and also some energies markets that are not well represented elsewhere. Natural gas, RBOB, maybe crude oil, even though I don't really trade it directly because it's not volatile enough for me. So I'm just having a look at what the options chain is doing in silver. And yeah, I think we have a healthy pullback going on. So let's just remind ourselves what silver looks like on a large time frame. It is more bullish than gold. So here's the weekly time frame. And if I compare that to gold, so same time frame, weekly chart, what do we see? We see that gold is still stuck in this range, whereas silver went into another all-time high and is continuing higher on Wednesday. Now, yesterday was an interesting day. We had a classic sort of euro close reversal that just carried on drifting throughout the rest of the day. And and here's the thing: silver actually has daily options. So 0DTs are not really much of a thing for silver because it happens every day. But you can extrapolate some developments as the options unwind. So at the end of the day, like all day yesterday, I was looking for that drop, and I wasn't in on the drop. Bizarrely, I made money on the long side on both times, but I was looking for the big drop. However, things have changed today. Today, we are looking at the volatility that has actually compressed slightly, so the implied volatility is not crazy. And let me just do this. And yeah, so yesterday I was expecting it to be more volatile because the IV kept expanding. Not by much, but it expanded significantly enough to kind of go, they're probably going to hedge here. Now, once that was over, there was really nothing. Once some of those puts and calls expired that were not in the money, that meant that any kind of idea for the gamma squeeze downwards disappeared. So now we actually have a clear view to test the 60. So I'm seeing this as a healthy pullback intraday. But I'm choosing silver because it's a smoother trade, and also on the large time frame, I would say that silver has gone back into a trending mode, whereas gold has not. And that will impact how the prices act intraday. So for me, silver recently in the last month or so has been a much more smoother ride, drama-free. So let's have a look at the daily chart. And even on the daily chart, I think silver is more bullish than gold. So yeah, let's drop back down to the intraday time frames. I'm going to focus just on silver here. So let's get these levels back. First thing, COMEX value area. So we're still inside value. We're having 2 days of value overlap. That could mean a bracket. Okay, so that's a bit of a conflicting information. Let me just see. Yeah, okay. And where does this start? Just checking the times where I put this fixed volume profile on. Yeah, okay. And as it stands, Asia had a very, very decent range. So we have Asia low sitting at 58,200, and we have Asia high sitting up at 59,600. 65. So again, we had a very, very healthy pullback. I was looking for this pullback yesterday. We did have a pullback, but again, I was in on the little Asia upside move, and then again, a portion of this failed auction that kind of just carried on. So this was the euro close. And I didn't hold this all the way through because as we got to the initial balance, it started to absorb some orders. And because I was already up on the day, I didn't really want to jeopardize that, being sort of like, oh yeah, I need to hold this because I want to be right. So I just kind of took a tiny chunk of it at the end of the day. So that was in fast markets. And now we are consolidating in that same area. But again, look at what Asia did. So it went up over 59. So we had yesterday the put wall was actually at 59, I believe. But now that has actually turned into another call wall. So there's a lot of call buying yet again. Not as much as it was on Monday. So that's changed. And with this pullback, I would look at it as a very, very healthy pullback for what's happening in light of the big upside move that we've had in silver. But I would think that we now have enough space to move up to at least 60. 60 bucks is well within the day's range. We have the ADR high that's just over that to 60. 170 is where the projected sort of expected range for the day is to the upside. But let's play the devil's advocate and see what we have to the downside as well, because I always like to have hypotheses just in case they decide to go into a more meaningful pullback. So where is that? It's ADR low is sitting at 57.70. And sub this Asia low area, we do have a concentration of a number of GEX levels. So if we get down sub 58, I don't think that's going to be a super smooth ride without some sort of an external catalyst that could bring us all the way through it. So outside of that, I would expect to see some chop sub 58. But it remains an area of interest for sure. This is where the session low was for yesterday. So that's another confluence. But for today, I would like to see Asia low tested at the very least. Anything else I'm seeing as not a good area to get involved. Now, obviously, if we start going higher, and maybe if we reclaim this gamma wall and current Globex VWAP, maybe there's a breakout opportunity there. But I personally hate breakouts. I'm a mean reversion trader by heart. So I personally, for my own sanity, would like to see it down at Asia low, maybe wick into GEX 1 and then pull back. That would be the most ideal situation. That could play out after the London fix, which is midday my time. I'm in England. It could also play out during the Euro trade close, right? So you have the London close that comes towards the last hour of fast markets. And for me, the highest probability trades for me when it comes to reversals are between sort of the post NY cut and also the second silver fix pricing, which is 3 p.m. my time, and all the way into the London close. So that's why that time of day is exceptionally important to me. Sometimes the London fix can bring a pretty sharp reversal, so that would be the next time of day to look out for any big changes. We can have a look at gold around 10:30 or after 10:30, because that's when gold has its fixing. So maybe that could be something to track as well. But I haven't looked at gold as granularly as I have silver. So we're going to maybe dedicate a little bit more time seeing what gold is doing, right? Because I know a lot of you trade gold. But honestly, I think that silver is a better trade at the moment. So gold has a gamma wall at 42.45. Usually it's a round number, so right away to me that's a bit weird. It's like, why are we doing weird numbers? GEX2 tends to be a good level to start looking for reversals. That's sitting down at 4,200. And then we also have a gamma flip area and a put support all the way down to 41.90. Now if I look at the projected ranges, ADR low is sitting down at 4,200 as well. So that's a good confluence with GEX2. To the upside, we have 42.85, so we're nowhere near that. And it is NFP week as well, so that can make things a little bit strange because everybody's waiting for additional data and information. So yeah, intraday, similar view. Let's just put these where they should be because I have not done these for gold. All right, so ADR low about 4,200. Is that really Asia low? Hold on, what am I doing? No, so this was yesterday's low. Wake up, D. Good morning. So Asia low was actually up here, so we're already below it. So that was Globex open. And then this is already kind of Eurex and post Tokyo. I wouldn't really consider that necessarily an overnight low for Asia for this particular product. Because Tokyo closes at like what, 7 a.m., 6 a.m.? Alright, so ADR high, 42.86. And then we have the gamma wall, so cold wall, weird number, 42.45. It's very strange. Okay, horizontal line, we need GEX2. Well, because these two are so close together, I'm going to recycle them and also name this GEX2. So confluence. So let's have a look at some profiles. So fixed range. Alright, so we're still, again, sitting inside that value area from yesterday COMEX development. And the previous day. So what I'm doing here, I just want to see whether we have a bracket on the value areas. So no bracket. Here's the value area from Monday. This is Tuesday. And let's have a look at Friday as well, because that's interesting because it went on a massive rip. That was a short day. Yeah, so again, messy, right? So one of them goes up, then this one's down. It's like, it's a consolidation, but it's extremely messy. So again, from that perspective, I'm not really liking what I'm seeing in gold for like a smooth, drama-free movement. So I will definitely stick to silver, but they are correlated. However, today, the correlation for now is sitting at about 0.8. So it's high, but I've seen it correlating to a factor of 1. And then the other day, it went to minus 0.2. So again, correlations will change day to day. And they both are the commodities in their own right. Right, let's have a look at the chat. Who's here? Someone's saying top step down again. I don't think so. I mean, look, they do some maintenance every so often. So if you find that the API is disconnecting, Control R might be an option. But it's working for me. So we got Tori saying good morning, good morning, good morning. Rose Love. Garib saying good morning, I'm new, have not bought any account yet, please suggest me. Well, that depends on where you are in your journey, right? So are you fairly new to trading? Are you somebody who's new to the whole prop firms as well? Are you somebody who's just starting intraday, but maybe you were already investing for years? It will all play into what sort of an account to get, but let's tackle the beginners, right? If you have never had a funded account, if you have never even gotten a payout from a prop firm and you're struggling, I would just go for the 50K. I would not go for the new no activation fee. Why? Because it's unlikely that you're going to pass it just by buying one account and then passing in a month. So that means you need to keep your costs down. A lot of people treat evals and combines as some kind of a casino where you just keep kind of going into this spin cycle. But you know, you need to keep the combines to, I mean, I don't like to go over 5 per month personally if I'm, you know, trying to do anything. And I've held some of my combines for like 2-3 months, just taking it super slow. I mean, obviously I was in a live account as well, which meant that I couldn't do anything with them. But now that everything's changing to the new dashboard, I have to change to a new dashboard as well, which means I have to go through the whole thing again. But it gives me an opportunity to see how all of this new stuff that they've added, which I haven't really seen, how it all works for you guys, right? So I like the new dashboard so far. It's much cleaner, it's faster, everything seems to happen in real time. So yeah, for now it looks pretty good. But yeah, if you're new, 50K, normal standard route, you know. Once you get down the line of proving your competence through maintaining an account, getting to a funded XFA, getting at least one payout a month for about 3 months, then you can think about scaling up. And then you can think about, okay, let's buy more accounts. Let's buy the bigger accounts. Let's get more aggressive. That's a different objective for people, right? But if you're still in the stage where you're struggling and you're not even able to hold on to, you know, an XFA past the first few days, or even the first couple of weeks, that means that something somewhere is not quite working. And nobody's perfect. You know, we do have moments where, you know, you lose control. Everybody has that. Nobody's a robot. So that's fine. But try to keep those costs associated with FOMO and tilt-like behaviors fairly low, if possible. Okay. Now with Topstep, we do now have back to funded, obviously, so it's an expensive option, I'll be honest, but it is an option if you don't want to grind it out again in a combine. But it's, you know, like anything in trading, if you are undisciplined, it has a monetary cost to it attached. Now it's lower than it used to be, because back in the day in the prop firms where I worked, if you wanted to get back to funded, you actually had to pay like something called the collateral. So it's like you blew up the money that they gave you. And yeah, you could come back, but it would be at a cost of, you know, at least 10,000, sometimes 30, 40K, and even 50K as a collateral. So it's like, what's a collateral? Well, it's the money that you're basically giving them as an insurance and access to all of their nice risk systems and all of the, you know, offices and computers and stuff. Now, obviously things have changed since, because everybody has pretty powerful computers these days. But back in the day, it was very important to have a place that has risk systems. Now we have Topstep that gives us risk systems for nothing, right? They're like, buy an eval and you get a full-blown risk management on the back end. It's like, what? But back in the day, that was all part of a prop firm, and it was very expensive to get back to funded. So even though I get that the pricing for back to funded is pretty, sizable for some people, it is an option if you mess it up, but let that be a lesson, right? So just if you mess it up, you go back to funded, you're like, ouch. So I've just, paid quite a lot to get back to funded. So let's try not to repeat the same things. So now you know what's not working. So then change things. It's always a detective kind of game. It's like, well, what am I doing here that is not working, and why? So, if you're oversizing, size down. We have, areas where you can do that. So if you go into the risk setting, you can actually set maximum trades per day. I've got it to 13, not to trade all 13 trades, but because I like to scale in and out, I would be mindful not to go over about 6 trades per day, 5, 3 ideally, or even 1 ideally. But on days when maybe it's a range day, we don't have that many opportunities for a trending move or a mean reversion or anything like that, I do tend to trade more. So that's why that's there. And then blocking out the symbols that will hurt your account 100%. And for me, silver, full silver is $25 per tick. It's too big for any of these accounts. Doesn't matter what it is. Like, unless you have, I don't know, I would need to have like at least 100 grand of actual capital, not nominal value, actual capital, to kind of go, yeah, maybe I'll trade one full silver, just one. And even that will be a little bit too much risk, because, like $25 per tick, it's a lot. So I maintain just silver, micro, which is also very expensive. It's $5. So gold is slightly cheaper, but again, from market risk perspective, it moves more. So if I'm going to compare it now, it was crazier. It has settled down a little bit, but at one point, gold was actually hitting like over 1,000 ticks of average daily range. Comparatively, silver actually never went much above 400. And to me, from a market risk perspective, silver is more manageable than gold, even though technically gold is cheaper. But is it really cheaper? Is it really cheaper from that perspective? Let's see. Yeah, markets are slow right now. So we're talking and we're discussing strategies for passing. But if you have something that like gold was moving, and like I said, at one point it was hitting 1,200. But let's say that when I looked at it a week ago, it was still over 800 ticks. So if you have something that moves 850 ticks, and if you know that it's 10 ticks, $10 per tick. So if you find yourself in a day where, let's say you're an investor and the whole position goes against you, and you're an investor, so there's no mention of over trading or anything. You're just in a position. How much capital will you need? This is like basic market risk, right? How much capital will you need to withstand a full average day, not even the worst day, because the worst day is another measure. It's value at risk, so that's another measure. But this one is just literally average daily range. If you were trading just one mini, which is a lot for these accounts, we always say go micros, right? You would actually need, at the bare minimum, what an average day, gold, perfectly average, nothing outlierish is happening. $8,500 it would take you to absorb the full day's movement, okay? Now, if you look at silver, so right now it's 389. It was a little bit more, so let's say 420, which is what it was. On $25, you would actually need, for full silver, you need 10,500. Not an outlier day. We're not talking value at risk where you hold the position against you as an investor on the worst or best day of the year. That's, like I said, a different measure. This is just literally an average day. So those are some very big numbers. So what are we working with when we sign up for these combines? We're working with numbers that are between 2,000 up to 4,500 drawdown in the beginning. Neither of these is very good for that. So this is why we go micros, because when you do go micros and when you say that, you know, the gold is at, you know, huge range, but you go to micro. So for one micro to absorb an average day, you would only need 850, and comparatively to silver, it would be about 1,000, right? So you don't want to trade, just from a market risk perspective, you don't want to trade the size that would not enable you to withstand the entirety of the day, of the average day's range. And then there's a measure called value at risk, which looks at the worst or best performing day. So what was the biggest day, up or down, that we've had in the last 3 months or 6 months? And let's say on gold, that's like, you know, 2,000 ticks, because that's how it was. That is the number. So for 2,000 ticks that would go against you that day, on a full 1 mini, you would need a bare minimum. Bare minimum, we're not talking like, oh yeah, I have 20 grand, I'll trade that. No, it's a bare minimum of 20K of actual real balance, not nominal value, in your XFAs or in your live to be able to absorb that. So this is how you do sort of more professional risk assessment, right? It's not just like, oh, what's my risk per trade? Oh, like everybody's so obsessed with risk per trade, they don't even see past the risk per trade and go, what is my risk reward on a per day basis? Which is another thing, right? But this is just your basic assessment of how much money do I need to trade this size in an account, wherever that account might be. It might be a personal account, it might be an eval somewhere, it might be a Topstep combine, it might be a Topstep XFA. How much money would you need? So this is actually a very good way to figure out if you should be sizing up. I'm not really in favor of like, well, I traded 2 micros, now I'm going to trade 4. It's like, great, but do you have like the capital to do so? So this is where you need to start maybe changing how you think of risk and positioning and the money that you would need. So this is why we say go to micros, because all of us have been doing this forever. Like I'm coming up to like 19 years as an independent trader and coming up to about 13, 14 years as a prop trader, right? It's a long time. And all of us, when we look at positioning, you don't just YOLO it like most people do these days. And you know, having some sort of a systematic way to have milestones of when you should be sizing up, this can tell you how to approach your day. And, you know, if you are going to trade also within the confines of a daily loss limit, which I know most people don't like. I don't like it. No, nobody likes a daily loss limit, okay? But at some point, you have to put some shackles on you to protect the work that you've already done. So all of that has to come into consideration when you're buying a new account with the view to get funded. All right, so we have a range in silver now. We'll see what happens. I have this little VWAP, anchored VWAP here, which I did from a 5-minute time frame. Why did I do that? Because it was the highest bar that we have currently. So I'm just tracking how the price is behaving towards it. But it's a range. So really, if I want to get involved into anything, I would still like to see this Asia low tagged. So I don't have my level here. These levels stay on most days throughout the majority of the day. It's not like all of a sudden, like if you look at yesterday's gamma levels versus today, They may have changed names a little bit, like GEX2 was it, I think it was at like 58. We had the put support, and I think GEX3 or something at 59. So all of these are still important levels with open interest in the options chain that the dealers, the market makers will use to potentially hedge against. So for example, if I want to go long, I shouldn't be going long into the gamma wall at 59. Why? Because we have positive gamma, so we're over this HVL, high volume level, and it is only a 0 DTE, which doesn't mean much in silver because the options expire every day. Sure, you have monthly options, but every day there's an option expiry, saying Monday, Tuesday, Wednesday, Thursday. It's an unusual product in that respect. So it is positive gamma though, which means that any of these areas will act as stabilizers. Now, if we start bleeding lower, and it's not just a whipsaw down to 58, 58 will be a natural stopping point for me here. But if we manage to tackle that and go even lower into some kind of an outlier day, that would then change how the market behaves around these levels, because at that point dealers have to start either selling more or unwinding their positions, and that amplifies the movement because it all goes a bit haywire. Right, so they are now amplifying the movement rather than stabilizing it. And this is why it's important to know whether you're a positive gamma or negative gamma on the day. It's not just like, oh, it's moving, I think it's going up. It's like, yeah, but context. So if you attach context to this, if we stay above 58, 70, I would definitely not want to be long into 59. But if we go over 59, which is also Globex VWAP, however you want to, use the levels, then I would like to see a test of 59 with a view that we carry on towards 60. 60 is my final stopping point. So if I'm not able to execute a good long, once we get to 60, maybe there's a bit of a scalp there to the downside. Is it going to be a mean reversion? No, because we still have some pain points up at 61. So I wouldn't want to be against the perceived trending day unless we get like a really big pullback. So maybe if we pull back to Asia high, then there's a scalp long there as well after we hit 60. And it's an execution flow. So if we hit 60 first, that means shorts are a bit trickier and it's a proper day. So yes, there could be a pullback, but I shouldn't be short. Instead, I should be waiting for a small pullback to go long. Okay, so where's the natural area for that? It's this little zone between the former Asia high and GEX2. So I'll be watching for that to happen. Now, if I manage to enter somehow ahead of that, that's another story, right? So let's say that we do tag Asia low. Well, where is my stopping point? Where I have some targets. Gamma wall will be target number 1, GEX2 target number 3, and then I would probably leave a runner for the 60, right? But if at any point one of these orientation points start to falter and you start to see the market kind of pulling back, that'll be my sign to take all of it off. Not try and, hold on because we want 60 today. It's like, no, the market's telling you, well, today, let's say you get to euro close and we're up at 59.50. And then I see absorption of the buy orders happening at that level. And I see them doing a sweep upside but then failing. And I see cumulative delta getting shaved off quite significantly and then holding. Sorry, I have Astrid snoring behind me. She's one of my dogs. She went to, she had nice walkies yesterday, so she's very tired. And if you hear snoring, that's where it's coming from. So if we get to euro close, I know that there's a euro wobble, right? So at that point, for me, if I'm long from anywhere from between 58 and 58.70, I know that I need to book profits there because it's a dangerous time of day to keep holding unless you're so much in profit that you can absorb the entirety of the euro close wobble. Otherwise, it's, then you're not, if you're not closing your trades at times of day when you know that there's a high chance of it going back against you, that's something else. That's like holding on to an idea in hopes, high on hopium, trying to get the 60 level and not really reading what the market is telling you, right? So we need that situational awareness, we need the objectivity, and arguably those would be the most difficult to develop in a trader. Oh, Moonky says, I've paid for back to funded a total of 6 times so far for 150k XFA. I keep overtrading and oversizing, so annoyed at myself. Okay, so you need to, yeah, so average daily range times price per tick. Smooth AF. Name is hilarious. Do you use order flow? Yeah, I do. Yeah, I always have bookmap up on my other screen. So you will see it here. And yeah, I have, if you look on my YouTube channel, so I have my own YouTube channel, go figure, which I've been not super active in because of various reasons. I have some health issues. But yeah, I did post a video called My Bookmap Settings, like I don't explain how to use bookmap too much. I mentioned a few things, but mostly people just wanted to know what my bookmap settings were. So I take them through how I set my bubbles, what the cumulative delta is set to, what indicators I have on there. I have the large lot indicator, I have sweeps indicator, and I do have the absorption indicator on there as well. So those, for me, are the 3 more important ones. I don't have the iceberg indicator because for my commodities, they're pretty easy to spot. And they're not, like you don't need, the tape is not so fast that you can't keep track of what's going on like in NQ. So it's very easy to see somebody iceberging in. So I don't need that on my products. But yeah, so have a look at my channel. I think Bookmap are running some deals now as well, so it might be worth picking it up as well because it's a great platform. It chews up and smushes together volume, time and sales, and the DOM developments all into one. So if you see a large order, one problem that I've always had with regular time and sales is if you see a large order on the DOM and we reach it, I have no way of knowing whether those trades traded out unless I was staring at the time and sales, and sometimes it's really difficult to spot them, right? So the way I go around it is to have the volume profile on there, but on the actual bookmap you will see them as historical events that have happened. It's going to print that it was a large order there that got executed, so you can see it, and then it's also in the profile, in the volume profile, because it counts volume, right? And to me it's just such a better indicator of what is happening. And then I put everything together with cumulative delta and with everything that I know about the options chain and gamma exposure and all of that good stuff. Sorry, my hair is annoying me. Can I trade in my sleep? No, I still find it very challenging. I think that trading is one of the only professions that will always keep you on your toes. So I was a musician for 20 years before then. And I actually, for the first 2 years of my prop career, I kind of tried to run prop trading and music like together. And I got sick and tired of the music industry, to be honest. Because again, at that point I was coming up to like 32, 33. And I didn't feel, after the credit crunch, like the whole music industry and session world, it just went weird. And I felt like I was going backwards instead of going forwards. And then I was getting older, and sometimes you get these like, I know I look young and everything, but you put me next to a 25-year-old, you will see that I'm not 25. Maybe on camera where lights are, very forgiving, but put me next to a 25-year-old, it's, you can see I'm older. Let's just put it that way. And back then, I still looked like a kid, but there were these like briefs where they only wanted kids up to like 25. So I started losing a lot of gigs just on the account that I'm older than what they wanted, and started getting gigs that were looking for like more mature people. And I'm like, F off, like what? And I always looked very young, always looked very young. So I'm like, what does it matter like what my actual age is if I can pass off as a 20-year-old? But they didn't, you have your date of birth, and they just look at it and say, nah, somebody else. So yeah, it just got a little bit annoying, to be honest. And then I fell in love with trading a few years before then. And I thought to myself, I need to get out of music. Like, this is just silly. So I went from being a swing trader into prop trading into intraday. So the thing with swing trading, I think out of all of the styles, swing trading via options, I find I can do that in my sleep. Like, it doesn't require terrible accuracy. It's reasonably, if you know what you're doing, it's reasonably forgiving. And if you get the timing wrong, you can roll the option to a degree with not too much hit on the capital, right? And then you can still end up making a little bit of cash there. But with intraday trading, I found it to be the most sensitive to any inconsistencies that you have. And it's so wild to me to see people who are effectively trying to achieve the level of skill that's very close to like becoming an Olympic medalist, with all of the, mental challenges, emotional resilience, and everything that being a high level performer comes with. And then you take a regular person off the street and they're like, I'm going to be a day trader. It's like, yes, it's possible, but it's going to take you the equal amount of time to develop those skills as the ones who have the performance skills naturally, right? So I always had weird skills, but that's because I'm a nerd and because I get obsessed. And then instead of, going out with friends, like for music, for example, I was sitting at home and driving everybody insane just by playing a single phrase for like 10 to 12 hours a day. My sister is occasionally in chat. She can be, she was witness to this. She would beg me. She would come into my room and go, Dee, please, just another phrase. Not, please, just play a different phrase. And I would play it through, slow tempo. Then I would increase it. And this is who I am. I'm very weird to live with, okay? Once I get like obsessed with something, I'm like a dog with a bone. I do not let go. But having said that, even after all of the years that I've been doing this, market conditions change. And they change pretty bloody frequently. So every time somebody comes to me and goes, I've been trading for 6 months, I'm doing really well. And I'm like, okay, yeah, just wait until your next volatility shift. Just wait. Because what happens, you think you're doing really well, and then something happens, and the whole narrative changes. Like suddenly the stops that you were using are too small or too large. I had 2 products. I had Euro-dollar that dried up on me in 2012. I was doing great for 5 years. Made 6-figure accounts, no problem, over and over. Became basically the new income that I had at the time. I was still doing session work, obviously, as a musician, but trading started taking over. Like, I was like, well, this is amazing, right? But then 2012 came, Greece went bust, and Euro-dollar initially moved, but then dried up completely. That's how I went into prop. So I'm like, okay, great. Now what? That's how I learned how to trade crude oil, and crude oil was beautiful to me for 10 whole years. We had amazing. We had COVID, we had madness, everything. Some of my best years were trading mainly crude oil. And then we get to 2023, and crude oil goes from moving literally every single day, 350, 400 ticks, so $3 to $4 a day, down to barely $1 a day. And my style of trading, I need the follow through. I can't have all of the 100 ticks be done in a 30-minute period, which is what is happening even now with crude oil. And then it just gets stuck. So it's like, what is this? And I spoke to Hoop. Hoop and I are big friends, Coach Hoop. So we both used to trade crude oil a lot. Like, we know each other from when we both started with Topstep, like many years ago. And I got in with Topstep in 2015. I was their first female funded trader. A lot of firsts with Topstep for me. And I was a part of the Squawk Radio, right? So I got to know everybody. I got to know Hogue, I got to know Hoop, I got to know MP, who called himself Nebraska back then. Because we all had like weird usernames and stuff. So we miss crude oil. We both, he said it. He said, I miss the old crude oil. I do as well. I honestly do. But now, we've got the base metals, we've got precious metals. So I have some alternatives. Is it the same? Do I love all precious metals? They're pretty cool. But do they have their quirks? Yes, definitely. So even though I traded gold for nearly as long as I traded crude oil, I had a bit of a love-hate relationship with it. So once the volatility changes, the way you are calculating your stops, the way you're projecting your targets, everything has to change with it. So this is the first challenge that you come across as a profitable trader, and you think, oh yeah, I've got this down. Then the market changes the name of the game, and suddenly you're like, this is not robust enough. I need to grow more. So it's not like someday you just get up and you'll never be in a drawdown. Everything will always be amazing. And it's the end. Like, it's not a linear process, right? We all go through cycles. And as soon as you realize that that's normal and you develop the coping mechanism to deal with the drawdown periods, you'll be much better off. Rather than freaking out, oversizing, doing even more muppety things, blowing up account after account after account, getting annoyed with yourself, try to come up with one of the reasons why I like the gamma exposure side of things is because it tells you, where the dealers are located. I've always had a problem with moving averages, MACD, RSI. They're wishy-washy to me. Because like, what does moving average tell you? Nothing. That we've moved an amount of things and we're now maybe in a trend. No, I want everything. I want to know the open interest at this gamma wall at 59. How many contracts are actually sitting there? What is the put-call ratio? What is the implied volatility doing compared to yesterday? What are the monthly options doing versus the daily options? And to me, that provides a clearer picture than any sort of like, oh yeah, RSI is going into oversold. Who gives a crap? Like, I'm sorry, but it's like I've seen RSI go, oh, it's overbought. All the way through the QE years, right? Post credit crunch. We had RSI overbought on ES for years on end. Do you know how many people blew up trying to short equities? And as someone who's been seeing equities go up, and up, apart from the two squiggles that we had, one being the credit crunch, the second being COVID, both black swan events, right? Systemic black swan events. Equities go up. So why the F are you shorting them? You have to have a very good reason to short equities. And if you short equities, get out quickly. Don't be aggressively holding them for hours on end expecting some miracle. Like if you have, a bad number, even that could be perceived as like, oh yeah, well now they have to do something with the rates, and then that's seen as a positive. It's like, it's a completely different ballgame. So even though long-term macro side will still show up after a week or so, on the intraday time frame, everything is so sensitive to time of day. It's sensitive to what the Asia has done. It's sensitive to whether we're in negative or positive gamma. Are we reaching an area where we've extended ADR on the day? Like, those to me are mechanistic functions of how the dealers really operate. And, I know there's an algorithm that uses ADR high projections because I can see them, right? And I do have my own mechanical trading system that, we have leased to some institutions at times, but it's definitely the projection of the daily range. You can also look at the implied volatility on the day. It's a very, very similar measure. But the average daily ranges, they're so reactive because there is an institution out there running an algorithm that says, okay, well, this is the projected ADR for the last 14 days, and you get to the low, yeah, they might overshoot a bit, but then it very quickly reclaims it. So it's like, what's that? Is that an accident? It's not an accident. That's the projection of the day, And I really think that the whole problem with retail versus institutional is just information asymmetry. You guys are looking at RSIs, MACDs. You're looking at, a crossover between 9 and 21 moving average on a 100-tick chart. And the institution is going, actually, implied volatility is compressed somewhat today, and we had a healthy pullback. Gamma is positive. Let's just run this back up. Like, there's nothing to stop it now. So, who do you think is going to win? Who do you think is going to win? And for me, the longer I went into intraday, the more I started moving away from lagging indicators. And, even when I'm wrong on the position, I know why I'm wrong. I'm not going, what happened? And I'm not freaking out over it. I know exactly what happened. And I know how to review the day constructively without flogging myself. Going, you did it badly. You were a Muppet. Why did you do that? No, you go, okay, today this is what happened. I tried, failed auction. It went into sustained auction. Where did it happen? Well, it broke a gamma wall to the downside, for example. Okay. Pretty clear, right? And not like, I shouldn't have shorted it because the difference in journaling and quality of the journaling. It needs to be functional. Now, obviously, if you have big issues with FOMO and stuff, you will find that when you start moving towards the more mechanistic side of things, like the market mechanics side of things, suddenly all of the fears and insecurities and confidence issues and everything, it usually minimizes to a point where it's no longer an issue. But until such time, you have to keep learning. You have to keep trying to understand this thing. You want to make money out of this? You want to, live a comfortable life out of trading? Then you need to know everything you should know about it. Like if you were becoming a doctor, a surgeon, do you think somebody will let you chop into them, slice into them? If you just read a book on the weekend and went, right, who am I going to perform surgery on a Monday? Nobody would allow that. But because trading on the surface only involves clicking a mouse button, everybody's like, yeah, now I can make millions out of this. It's like, dude, you need experience. You need different market conditions. And that takes time. That's not going to happen in a week. You need to live through at least 2 years of very different market conditions and stress test whatever you're doing over time. Time is the only judge. There's no other. So if you crack that and if you approach it seriously and if you approach it with a nerdy mindset that this is something you want to seriously do, and then you start looking into institutional level data, you will find that all of your FOMO nonsense and all of that things that you're struggling with suddenly is just not a problem anymore. I mean, it's not always going to disappear. Sometimes you'll be like, damn it, I should have been in on that. I saw it, wasn't in it. Why? It either happened out of time. Maybe you went to answer a door because, a package arrived or something and you were not in. But it was perfectly within a plan. It's going to irk you. Probably more so than not knowing why it happened. And, you will have days when you still go through Muppet behavior. So I don't think it fully ever goes away, but you can minimize some of the Muppet moments that you experience. And they become less frequent. Let's put it that way. How's gold doing? Just not much, really. If anything, copper has moved more than anything else. Let's have a look at copper. Copper is pretty reactive to certain releases. Let me just see what we have on the calendar today. How do you find price action? You look at the chart and you go, hey, there's price action. Its structure, highs, lows, is it a swing? How did it get there? Was it choppy with a lot of inside bars? Was it clean? Again, that's another class in its own right. join us again for next week. Yeah, so I want to say tomorrow I'm not going to be here. Unfortunately, I had to take my oldest dog, Lenny, who's 13 years old now, for a heart scan. And because it's a cardiologist scan, I tried to change it to Friday and everything. And they were like, no, Fridays go away pretty quickly. And the next thing that we can offer you is in January. And he's coughing. He had some kind of an episode on Saturday. So obviously if I can extend his life by, knowing what's going on, there's a new drug that they can try on him as well. I really want to try that. I'm not in favor of killing dogs before their time. He's still exhibiting, alertness. He is still going on walks. He loves walks. He still wants his ball. His appetite has decreased a little bit, but he still likes to eat. He will still have treats. He will still have some of his meal. So yeah, it's not time yet, but if I can do anything in my power to, keep him with us for a little bit longer, I'll do that. So I won't be here tomorrow because of that. But you will see me, I think next week I have group coaching on Wednesday. And obviously then, normal Monday through Thursday, as per usual. All right, what am I looking for? I'm looking for a calendar. So what have we got? I know that we got NFP. It's NFP week, which is always weird. But today we have ADP non-farm. Okay, so ADP non-farm is probably not really going to be much impact on copper or silver, to be honest. Gold might be a bit more sensitive to it because it has a more direct connection to the dollar. However, talking of silver, ISM services PMI, that could be a very good mover. So maybe that's what they're waiting for at 3 p.m. 3 p.m. my time is also when the next silver fix pricing happens. And I'm probably going to wait and see what happens. But copper, we've got it running to the upside. So what's happening on copper? Let's see. We are in March in copper. So let's have a look. I've got a little tracker for gamma squeeze and also a bunch of other things that I'm tracking. I'm just going to have a look. But we have gone into an outlier day already on copper. So that is very, very interesting. Smashed through all the ATRs and everything. And moving through that big. So my longer time frame is the supply line. It's saying the supply conterminus line. That is, I believe, is it the daily chart? It was from the weekly chart. Ah yes, we've changed contracts, so this needs to go up. So yeah, we are now deep into the week structure. So I would like to see close above this high without meaningful wicks, because every time we tried in the past, we failed. So I'm going to be keeping an eye on the weekly chart on copper. If that happens, I will be interested in more longs intraday. But copper has been off my radar because it's been stuck in this. I don't like to trade products that are stuck on large time frames because it's very painful. There's nothing that's driving it. So you're not going to get that like smoothness to the intraday movement, because everything, like larger time frames always win. It's just how it is. So if you can find a good trending market that is not stuck in an inside bars and range upon a range upon a range, that becomes much better conditions and it's drama free. But yeah, copper seems to be breaking out. I would like to see it by the end of this week, closing into or past the highs that we've attempted previously with no selling wick. If it wicks all the way up and then all the way down and into the range, I'm going to be very upset. Be very upset. Just joking, of course. But yeah, it would not be what I want to see, and copper is probably going to be still on the back burner for me. But yeah, it's an interesting attempt at a breakout. So we'll see what happens there. So let's see. Okay, so implied volatility at the moment is about 25% on copper. Okay, we have a lot of calls, so put call premium ratio as well is 0.8. But yeah, there's some decent amount of call buying. Now 540 seems to have quite a lot of interest at the moment. So that's definitely a magnet. You can't really see it on the end of day levels on mental Q because it's gone past the end of day levels. But on the monthly, you can see it. So 540 as the first magnet on copper would be something to look at. We're not far from it at all. And then if it overshoots that, maybe 545. And then depending on what the time of day is, like are we close to the euro close, maybe we can short that. But really I would like a decent pullback and then kind of going long. Now to the downside, 530 is a former localized high on the intraday time frame from yesterday, and Asia high was around 530. So you know, if it does pull back down to 530, I wouldn't be opposed to popping in a long intraday. But yeah, if the price stays below 540, I would expect to see some dealer hedging there. If it goes higher, just don't touch it. Just leave it. Leave it. Like I say to my dogs when they are eating something they're not supposed to. Leave it. Or drop it. The coughing that you just heard, yeah, that's Lenny. That's my King Charles Cavalier. He's the daddy to all the puppies. So, you know, there's sad, you know, considerations. Obviously he's old, and when he goes it's going to be terribly sad. I'm probably going to be on here blubbering my eyes out because, you know, I find it very difficult to lose animals, but it is what it is. However, we do have 6 of his kids, so in each of them there's a bit of Lenny. From the butler paw that I like to call, he basically beats me. You know, I'm his butler. I'm not his owner. I'm not his grandma, mommy. I am just the butler. We have a very toxic codependency. It's a very weird thing. I'm usually very close to all of my dogs, and everybody cuddles, and you know they love cuddles. He doesn't really do cuddles with me. He does cuddles with my husband, but with me, he's always like bit standoffish. He wants me to touch his chest, but not like if I get very close to him, he's like, go away. Like we just have this weird relationship. But he does want to be with me wherever I am in the house. So explain that. But I tell him to come. Like I you know, my husband goes, you know, come, because he's deaf as well at this point. He went deaf really quickly when he was about 10, 11. He just kind of stopped hearing almost overnight. It's a common thing in Cavaliers. They're littered with like issues. He's actually all right considering how some Cavaliers are. And yeah, so my husband goes, come, and he goes like all happy to him, and I do the same, and I'm like, come, and he just looks at me, looks the other way, and then goes like, gee man, thanks, like, you know. Yeah, Cheryl says, I'm still amazed that silver is at 58. Not sure I can afford to buy an ounce. Yeah, I know. What is the ticker for copper minis? So copper mini is HG, but for if you have an AMP account, it's going to be CP. And as I've discovered when I was writing the API connections and my little API bot for Topstep X, behind the, like under the hood, they also call it CPE, which is interesting to me. But HG is the main copper, and then MHG is the micro, because copper is pretty expensive. It's $12.50 per tick, $12.50 per tick. All right, so silver's still quiet. I'm still looking for this Asia low, so there's nothing going on there. Oh, Cheryl says, I used to show and breed dogs. I loved grooming my cavies. Yeah, it's they are beautiful dogs. They are absolutely beautiful. Like, I love the look of them. But knowing how many of them suffer from so many issues, I don't think I can have another pure cav, because obviously his kids are all mixes. They are half cav, half pom, and they're kind of the best of both worlds. Like, they have the mannerisms and the meek and mild nature, inquisitive, gentle, very excitable. And what was funny, our first dog was a Cava Pom as well, which is why we have all of these guys now. And he was the same. He was very loyal. He was amazing. And Cavaliers are beautiful, and if only they didn't have so many issues, man. Like, it's killing me to see him go through this mitral valve disease that they all get in the end. Like 97% of calves will get it. And it's terrible. It's like our other dog, he had beautiful, nearly 16 years of life, and then ate something in the park, trashed his kidneys, and he was gone in a week. It's like, that's what you want. It's like, it was terribly traumatic for everybody involved. I cried for him for a year and a half. But it wasn't this like slow decline where you're like looking at him and you're like, he's struggling. What do I do with you, man? But he still wants to live. So, it's a tough time for me. I'm not gonna lie. I was very upset on Saturday. Very upset because he ate something. I think he nicked one of the, because he's allergic to chicken and beef and a whole bunch of other stuff. So he can really only eat venison and pork, and those are his proteins. But because obviously I feed others, other protein, I think he nicked something from somebody, and his stomach started playing up. So the poor dude, like, he was sick all evening, not feeling well. I could see him. So he kept kind of standing up and not being right. And, 5 a.m. in the morning, Saturday, he gets up to be sick, loses his balance, and smacks into the door. And then he couldn't get up. So I was like, was this a syncope? What's happening? So I thought he was dying, right? So I'm crying my eyes out. This is how ridiculous I am with animals. And I'm like, oh, let's just be there for him. And then he recovered, and I'm like, okay, so he's not dying. Like, what the hell? But then I was so upset that I kept crying for the next 2 hours and got myself into a complete mess. And it took me, because I have a chronic illness as well, and it totally derailed me. I was already having a headache for 6 days for unrelated reasons, and that just kind of finished me off completely. So then I had to go and get different medications. I felt terrible for a whole 48 hours. On Monday, I actually felt sick whilst I was doing the stream. So I tried to push through it. So I feel better now. But oh my God, Lenny just literally cut my life by a few years. But we'll do the scan tomorrow and see where we're at. But yeah, it was very distressing for everybody involved. And then now he's just a little bit slower, so he's still not back to his old self, which is why I'm a bit worried. But he's going for a walk, he's eating. So I'm like, so now what? And he, yesterday, he went up to the pantry where we keep all the dog treats, and he was scratching at it, buttering me. Like, get me my treats. You, butler, get me treats. So I was like, so now what? Now you are you're back to bothering me, and you're not dying, and all of that stress that you caused me. Now what? He was like, eh. So, it's a difficult time for me. But we'll see what happens tomorrow. I don't want him to suffer, but on the other hand, you don't want the guilt of cutting them too soon. So there's a great drug called Entresto, which is also for humans, and it can apparently remodel the heart. And he stayed remarkably stable on Vetmedin for 3.5 years. But yeah, I think he's now pushing towards heart failure, finally, after 3.5 years. But it's not the end. It's not the end. We'll save you, Lenny. Could you outline the plan for taking a long position in silver? Yeah, so if we get down to Asia low, and then we wick below it, maybe even touch the 58, but then we need to reclaim those two, right? I would front run the potential long trade, even if we reclaim GEX1, if we get an exhaustion volume candle and a return to range, followed by a very strong movement away from that. So that would be a front run for me on a 2-minute time frame. I like the 2 minutes. Obviously, I look at the tape as well, so I want to see that initiation, and I do not want to see selling wicks. Okay, so if we're looking for longs, we're looking for a wick below this GEX1 level, maybe into ADR low. Maybe that's an option, right? I always like to keep like my zones where I want to become a buyer pretty wide so that I have options. But then I kind of watch for very, very particular events on the tape and how the market is behaving. So you want to see consecutive bubbles to the long side. You do not want to see any selling wicks on the actual price action chart. You certainly don't want to see absorption of the buy orders. So if you see a big volume and the bubble is just growing, but the price is not moving, that means the buy orders are getting absorbed. We do not want to see that at that point. Now, alternatively, if we go higher from here, and we start hanging above VWAP and above this gamma ball of 59, I would be looking maybe for COMEX to retest that area and then to break out of the value. So we need to be outside of value from yesterday, which is sitting around this gamma ball at 59. So we need to be above 59. At that point, I might consider a trending move higher on the account that we reclaim VWAP. Okay? And it's Globex VWAP. It's not session VWAP. Important distinction. So you're looking for a full 24-hour Globex, effectively VWAP. And if that gets reclaimed, we could have a good run at least to 59.50. But my ultimate target is 60. Okay, I would like to see gold. What are we trading? Silver. Silver at 60. At some point today, because there's really not much to stop it. This looks like a very orderly pullback. It looks a bit scary, but it is orderly. Why? Because the implied volatility actually compressed on the pullback. That's a good sign. That's healthy, right? If the volatility expands, that means you're like, oops, what the hell's going to happen now? And then it can go either way. Then you're going to get a big move out of it, but you don't know which side. At that point, if you are into options, maybe some kind of a straddle could be an option there, There are, many uses for it. But just speaking intraday, whenever you get a pullback on a reasonably stable implied volatility, that's a healthy pullback. And then if you have not much in the way I'm perceiving this, we should make a try for 60. Whether it's going to be today or tomorrow, I don't know. Nobody does. But that would be my plan. So Asia low, GEX1, and ADR low is a rough area where I want to be a buyer. Alternatively, gamma wall gets reclaimed, and then 59 becomes the new orientation point to the upside. So it's kind of like this, mental cue call it the handshake. So you trade level to level, but I use it for orientation. I may not trade level to level, but I may look at them as orientation points. So depending on how prices are behaving and what time of day it is dangerous for pullbacks. Like typically post NY cut. Well, let's start earlier. London fix, so midday my time, which is coming in about an hour 15. First half an hour of LME or COMEX tends to go the wrong way. But London Fix can sometimes bring a sharp reversal. From what though? Because if I look at how the price is on silver, we have no trending move, right? So it will be anyone's guess where that's going to go. The sharp reversal upside could be a potential, but that will become a new orientation point at midday. We don't have it yet. We might bleed all the way down, so the London Fix might become nearer to the Asia low. I don't know. We'll see. But yeah, that's my plan. Would I short it? If the time is right around GEX2, maybe. So basically, if we're in the Euro close time and we're struggling to get past 59.70, so above Asia high, I may consider a scalp short. It wouldn't be a big mean reversion trade because of what's happening in the options, because there's still a lot of call buying going on. So I would be looking to maybe just do a little scalp into the Euro close or right after, and then that's it. We also have the metals exchange closing, and even though like silver and gold don't really trade on LME, but for some reason it still has a knock-on effect. Like every time LME closes, I suppose all the base metals have a connection to the precious metals too. So it causes a little bit of a reversal. But the main settlement for silver and gold in particular is COMEX. And that is 6:30 p.m. my time. So usually if I get to 6 o'clock and I start to see them at these important pain points, and then they're starting to reverse, so that they're absorbing the orders, or there's a sweep upside but we're not doing anything, and then delta gets shaven off really quickly to the opposite side, that'll be my sign to maybe try a short there into settlement. So it's a settlement fade. So that will be the other side of the picture. But today I don't think I want to be aggressively short anywhere. When I say aggressively short, I don't mean size, I mean time held. So I want to be aggressively long. So if I manage to get into a long position and it's still making, strides, I'm willing to give that more time. But it also depends on the price. If I get involved around 59, that's going to be a bit tricky. If I miss 59, if we never get down to Asia low and we just shoot up, I don't want it. I'm not going to chase that. That is not in the plan. And that's how you get into trouble. By trading outside of your levels and just going, well, now it's 59.20, but I wanted to get it at 59, but I missed it because it was too quick. Oh, let me chase it. So then what? And then it wicks down to 59, and you're like, but why? Let me try again. And that's how you get into trouble. So you miss it. So have some sort of actually a really important point. If you have a level in mind and the market moves like 2 stop losses away from whatever you're trying to achieve, away from that level, you probably missed the boat. So don't chase, okay? Have some sort of an invalidation. For me, I use wider stop losses on the first try with a view that we're going to chop around the zone that's going to give me an ability to scale in and therefore minimize the stop and get to my maximum default size. So that will be, I start with 85 ticks, but then that eventually comes down to about 65, 55 with the scale-ins. You can do it the other way. That doesn't work for me, but some people do that. Start with a very small stop, and then as it goes, add, but don't add unless the whole stop loss maximum default that you've set for yourself is like way over. So if it goes over 85 ticks away from whatever the average entry is, that means you need to stop adding. But that doesn't work for me. I like it the opposite way. So I like a wider stop to begin with, lots of room, lots of time to think whether this is going to move my way. And then it dips into my MAE, maximum adverse excursion. And then I watch tape, I see whether we're invalidating something, and then I enter. There have been times where I managed to swipe a really good range trade on a very small stop loss and then added in, but it's rare because I'm not that accurate. After nearly 20 years of doing this, I'm just not that accurate, and it doesn't work when you're trading with any sort of size. Is what I'm well I've learned over the years. Because, you know, there was a time when I worked for a company that was really, really pushing size. And it was partly because they were only paying us 20%. So to make it worthwhile for everybody, size had to be a big part of it. And, you know, I was trading like 180, 100, 120 contracts of gold and crude oil. And I was like, damn, this is difficult. So you just cannot execute a single 100-lot order and expect there's not going to be any consequences, because the order book is thin. It's thin. There's just not enough contracts there. So you're going to freak everybody out. So there are two options. You iceberg in, generally, and you have a zone that you want to work inside. So that means you expect the price to spend some time in the liquidity pool, and then you're adding, you know, 5, another 5, 10, up to the position size that you want. So that's what we say, working a position in a zone. Doesn't really seem that relevant when you're trading with 1, 2, 3, even 5 lots and 10 lots. It's, you know, that's all nothing. But the bigger the size, the more you start to realize that you can have an effect on the market, especially in the commodities, and that you have to start being a little bit more savvy about how you approach your entries. And this is where scalping on huge size just doesn't work, because the precision is not there. You're going to get slipped. Whacking in one order, you're going to mess the whole order book up. It's difficult, you know. You can do that in equities. In ES, work in 100 lot all you like. Even though I got stuck in it, one FOMC, it was a big order. It was over 100 lots, and I couldn't get out. So this is why I don't trade FOMC. They just wouldn't let me get out. Nobody would take my order. So yeah, that's a bit painful, very painful. So yeah, just something to keep in mind. So for me, from that perspective, coming from that sort of a world, I'm just not that obsessed with being like, oh, let's call it to the tick. Like, who cares? Because it doesn't matter. If it's a winning position, it's a winning position. Like, did the zone work or not? That's the only thing that matters. Anything else, you nitpicking over like a tick here and there, that's very retail to me. That's like, ugh. Like, oh, I got it in at 58.273, and I'm like, slow clap. So the you know, such pedantics, to me, it's something you can do on sim accounts, and it's something you can only do on very small size. As soon as size starts to come in, you start to realize that how pointless that exercise is, because you can't control the entry, you can't control the fill. You know, you try to get a fill of like, you know, 20 contracts. Do you think they're going to fill you like immediately without you having an effect on the order book? Well, you're going to take a few prices with the 20 lot. Try doing 100 lot. You're going to take all of these and then some. And then you're not going to have anybody else on the other side to take the rest. So what happens? You get slippage. That's how it happens. Paul H., I was thinking about you just yesterday, actually. Yeah, I was thinking to myself, I haven't seen Paul in chat for a while. So still working hard, but good to see you, mate. Need to have a little chat very soon. How do I draw my fixed range? From which point to which point? Time. So COMEX times. But I use the entirety of the day. So I don't just use COMEX. So in my time, it's 1:30 p.m. till 6:30. But I drag it from 1:30 till 9 p.m. So if I remove this, I'm going to do that again. By the way, this is just Lucozade, nothing else. So volume profile fixed range, you get out. I find COMEX beginning, 3:30, so 1:30, and then I drag it. Here's 9 p.m., so end of electronic trading, and you click. So drag, let go, click, and then you get the fixed profile. You probably have to do this manually. Now, on my charts, obviously I have my own lovely indicators where I can switch, chop, change however I want. different sessions and everything. This is why we created it. And we're trying to bring it to other platforms, but we'll see. It's going well. The project is going well. Right now we have Discord levels, so those are live. And I need to make a video introducing those. But with Lenny putting a wrench in the works and me getting a horrible headache, that was a bit tough. So yeah, I do have homework to do. But yeah, so fixed volume profile, similar to TPO profile. I did find on some outlier days that they differ. But if it's just like a regular day where, you know, nothing odd is happening, you don't have a huge release. Granted, this is NFP week, so we are going to have some jumpy moments. But yeah, on days when it's just like normal, blah, 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 the volume profile and TPO profile tend to be very, very similar. The difference is that TPO profile also has the initial balance as a component, whereas volume profile is sort of just smushed in. So this is why I prefer TPO profile over volume, but it's very, very similar. Very similar. Both hold quite a bit of value. When you're trying to look at the structure of the day, where is the distribution curve? Are we inside it? So, you know, with the distribution theory, if you're away from the distribution curve, but not too far away, the most highly probable event is that you're going to snap back to the distribution curve. That is the basics of profile, because we are working with probabilities, we're working with distribution curves, and once you start to understand that, knowing that something opens up within the session range from yesterday, let's say we get all the way up here, what's the first available hypothesis, thesis? That you're going to go down to the distribution curve. What's the second thesis? That if this is an uptrend, the outer edge of the distribution curve is going to provide you with a nice continuation. Now, if that breaks, you have a situation, special situation, it's a special situation, where you accept the value. I always found that very funny. You accept the value from yesterday, and then you expect it to rotate because we've accepted the prices. So therefore, a full rotation is expected. Anytime it doesn't rotate fully, you always have to go, is this an uptrend being very strong and therefore we can only get a partial? Maybe. Something to consider, right? But even this smash down, if you look at how post-Asia, this Asia take profit move happened, this is pretty sizable, right? So it just went all the way down, rotated, and now we've settled. So right now we're inside the distribution curve, which skews the probability. So what I need this to go below this area, below the distribution curve, so that I can have that snap back into the norm, effectively. So that's what I'm looking for. That's one way to use it. Then obviously you have subsets of that. You have the strength of auctions, single prints, blah, 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 all of that, day types. But it's a very useful study to have, because once you smush everything in your head and you see it happening in front of you, it becomes a very powerful situational awareness tool. I know it seems like a lot, but if you just take it one by one and structurally just, let's say today I'm just going to learn about open sentiment in relation to where we open to yesterday's value. Let's see how that works. And then you observe, and then you track, and you journal. So once you get some idea of how that works, then you can move on to the current day profile. And you're like, how is the initial balance behaving in relation to the yesterday's distribution curve? And then you add on to that. So you never try and do everything at once. Just like any high-level skill, you need to level up the pain points of your skill set one at a time. You don't stop smoking, get fitter, get tidier, move house, get a new job all at once, right? You can try, but you're going to fail in about 4 out of 5 things. So how do you do it successfully? Well, first, you pick one thing that's the biggest problem. You tackle that. Once you tackle that, and it becomes more of a habit, you move on. So if you try that, I know on paper it seems like it's going to take a long time, But what takes the longest is you bumbling around, not sorting your biggest problems, and then spending years doing the same mistakes over and over, never advancing, and constantly complaining how it's not working. So that needs to change, right? Any kind of excuses, moaning, all that, I am not really in favor of that, because I think that's very much victim mentality, which as a trader you can't really have. You can't be like, oh, it always happens to me. What happens to you? Markets don't even know you're alive. They don't know I'm alive. They don't know anybody's alive. They don't care, right? So it's like any sort of always happens to me. No, whatever happens to you is a direct product of your decisions. So how does that run? It means you have to take responsibility for every piece of action that you do as a trader. Very uncomfortable, right? But once you get comfortable with getting uncomfortable, then you're going to see growth. Anyways, I'm gonna end with that. We don't have any levels here yet. It's all flat as a pancake, so we need to wait for some better movement. So let's wait for the London fix, maybe even COMEX. Let's see what ISM manufacturing does, and then we'll have maybe a little bit better conditions to trade our little silver to the upside. Right, that's it for today. This was the Euro Trade on TopstepTV. I'm Marcus Okadi, and I will see you probably next week, because obviously I'm taking my dog for a scan. Thank you for spending time with me. Enjoy the rest of your day. That's all I have for you. Take care.